Good morning. It is bright and early on a Monday morning this week, and I am excited because it is sunny and it is not snowing here in South Dakota. Welcome to the live this morning. I'm coming at you pretty early this morning because I'm super pumped to talk about this topic. It is something that I'm seeing come up in a variety of different places, so I feel like it is time to share about it. We're going to talk today about business entity classification, and if you're wondering what the hell that even is, I'm going to explain that. And we're going to talk about why you need to worry about it now, even if your business is brand new. My name is Rachel, and I founded Moms on the Rise to help moms take the scary out of building their business, helping them do the things that are scary, helping them see that it's not so scary, and really helping them get to the point in their business where things can flow with ease and they can grow instead of always being worried about what happens when that growth occurs. So today we are going to talk about business entity classification. About a week ago, one of my clients brought this question to me and said, she had a client ask her the question and she asked me the question, and I started to wonder. I wonder what people are doing with their businesses. What are these women doing? And I posted in a few different groups, and I posted in this group as well. And I realized that a lot of women are playing it safe and they are staying as a sole proprietor because that's quick and easy. And they just feel like that's enough for where they're at. Today, I want to talk a little bit about why you should dig a little bit deeper into this issue and how changing your business entity classification can actually benefit you. And I want to start by saying, of course, that this is not a substitution for any legal or tax advice. While I am an attorney and a CPA and can share this information with you, I do not know a thing about your current situation, especially since I'm not even interacting with you. And so I don't want you to take this as advice, but I'd like to give you the information so that you're armed with it so that you can seek out the information that you need and maybe seek out a professional that can help you with that. This is something that I help all of my clients with, is figuring out where they should be on the business entity classification spectrum. So to get started, let's talk about the different business entities. And I'm going to do this really quickly. So a sole proprietor is just hanging out a shingle. You're one person, you're a business. Anybody can do this. Anybody can do all of these entity classifications, but you don't need to fill out any fancy paperwork. You don't even really technically need to make sure that nobody has your name, although it's kind of a good idea. You just throw out your business. This is like what I feel like. It's like a lemonade stand. You throw out your table and you put your tablecloth on and you've got lemonades and cups and you're selling stuff. Okay. You don't even necessarily need a business license, although that's something that's going to depend on your state. You can start a business. Okay. So in the online space, that means you start a Facebook group, you start a website, you have a business, you start taking money from people, you report it on the Schedule C of your taxes, and that's the end of it. Okay. So that's how a sole proprietorship works. When you take it to the next level, I suggest clients start themselves out as an LLC. And again, not a lot of process goes involved in doing that. But the reason I suggest that to clients is because an LLC is a limited liability company. And that means that you are limiting the liability of your personal property should something happen, should somebody sue you, should somebody have a slip and fall on your business property, should they say that your coaching caused them harm or something like that, then they can only go into your business assets in order to they should win a lawsuit or they want to sue you. So you're really limiting liability. This also is a good idea for creditors. So let's say that you invest in some coaching thing and you can't pay for it and you end up declaring bankruptcy or whatever on that particular debt, that coaching company that you're paying or that you neglected to pay, they can't come after your personal assets. They can only stick to your business assets when doing that. And so that's going to be one of the really big, huge benefits of having that limited liability, that LLC. Now, when you're an LLC and you're one person, you're considered a single member LLC, and you are taxed just as if you were a sole proprietor on your taxes. Again, a lot of business owners want to stick with that because it's easy. It's what they know. It's what they've been doing. But I challenge most of my clients to take it a step further and look at taking that LLC and electing to be taxed as an S corporation. And that is where you can really see some tax savings. So when you're being taxed as an S corporation, you are a totally separate entity from yourself. And that means that you have a totally separate tax return, and that income is considered separate. Now, as an S corporation, you do flow your income onto your personal taxes, and I'm not going to go too deeply into that. So you are considered a through entity, but you can really save yourself in some taxes. And here's how that works. So if you're a sole proprietor or a single member LLC, earlier I mentioned that you are taxed as on your personal tax return. You are going to pay income tax on all that income, all that net income, of course, duh, right? But you're also paying self-employment tax, and that's at a rate of 15.3% roughly, because there's some little tweaky calculations that you do in there to make that a little bit smaller, but we'll use that 15.3% amount. That's a lot of tax that you're paying on every dime of net income that you make. And that's what happens when you're an LLC or a sole proprietor. When you're an S corporation, on the other hand, you are only going to pay that 15.3% on the net income. Sorry, scratch that. On the 15.3% of what you pay yourself as an employee. So you heard me right. As an S corporation, you are considered an employee of your company, and you're only going to pay the self-employment tax on your wages, not all the net income, only what you pay yourself in wages. And that can mean a huge tax savings. If you're a business earning 6 figures, even if you're only having a net income of 5 figures, and that's not really an only amount, that's an amazing amount, you can still benefit from this because you can save yourself a ton of money when you are not paying self-employment tax on every dime of your net income. Okay. Now, you are paying income tax on all of that net income. So the savings comes in that 15.3%, which if you're looking at even a $10,000 a year net income, that 15.3% is like $1,500. That really can add up. That's more money that you can invest back into your business. So it's a total tax savings. Now, a lot of my clients are resistant to this because they're unsure about it, because they feel that, well, my business isn't big enough, I'm not making enough money. But when I created my business, right from the bat, LLC, elect to be taxed as an S corp, because I want to save myself that self-employment tax. Now, one of the downfalls, I guess, of this situation is that since you are an employee of your business, you will have to pay some, or you will have to fill out some more forms. You're going to have to make a W-2 for yourself. You're going to have to pay some tax returns or file some payroll tax returns, either quarterly or at the end of the year. There's a little more paperwork involved, but again, you have to ask yourself, is it worth that tax savings that you can have by electing to file this way? Now, I won't go into the details of who can do this or all that kind of thing. That's something I work individually with my clients on. Some states don't allow you to be an LLC depending on what type of business you're in. That's state specific. Some businesses, an S corporation just is not the right route to go. And so that is something that I would want to talk with you one-on-one if this is something you're considering. But what I want you to take away from this video today is that even if you're a small business or you just started out, looking at some of these elections that you can make to save yourself money from the outset are a really good way to save yourself money, are a good way for you to have more money to invest into your company. And again, it's not for everybody. I want to reiterate that one more time. It's not for everybody, but it's something you might want to think about. And it's something you're going to talk to your accountant to, if you've got an attorney working with you in your business, find out what their opinion is based on your type of business. You want to know what's the state that you're located is definitely going to make a difference. When I work with my clients, before I answer any questions, I always go and check out the state rules. And I've gotten to know most of the states by this point on whether they allow a single member LLC. But this S corporation thing is an IRS deal. And so it's going to be IRS rules that are going to rule that. So any business can turn themselves into an S corp, and it's pretty simple to do once you decide that's what you're going to do, once you are armed with the right information. So I hope this was kind of helpful for you. I hope it wasn't too confusing. But again, the biggest takeaway is it's something that you want to consider even if you're a small business, because it is going to save you some taxes in the long run, and it really does not overcomplicate things too much. So instead of paying self-employment tax on all of the net income that you have in your business, you're only going to pay it on a small amount. And that's something, again, that you're going to want to talk with your attorney or CPA about on what that amount should be. But consider it, ask the question, throw that information out there into the universe and find out if it's something that's right for you, because it might just be something that takes your business to the next level. And I know a lot of my small business people say, well, gosh, I don't know, I'm not big enough, I don't want to do that, That's what's going to take that step into moving you into the next level. of your business is by taking those kind of leaps. So if you have any more questions about this, shoot me a private message. I love hearing from you. You can also post in this group and say, all right, here's the business that I've got going on. Here's where I'm located. Is an S corporation election right for me? Should I be doing something else? And I can certainly respond to those as well. But really think about it. Take some time to consider it. You can also post some questions down in this, this live as well. But really soak it in and think about it, because it might be the right move for you and it might save you some money in taxes, and that might be well worth your time. So have a great rest of your day and your week. I look forward to hearing from all of you in the group about this issue, and have a great day. Bye-bye.